Yostpille. I'm from Oasis Pro Markets. These are my colleagues. Oasis Pro Markets is an alternative trading system that's been built to trade digital security tokens for cryptocurrency. We won't be transacting with Bitcoin or ETH, but rather with stable coins to take volatility out of the equation. We're a multi-asset platform. That means we can do equity, debt, over-the-counter, asset-backed securities, mortgage-backed securities, SEC-registered funds, registered securities, and unregistered securities. We'll be launching our platform at the end of March with a soft launch and a much harder launch in June. We just completed our Series A capital raise, so we're going to be growing. I did promise not to turn this into a shameless promotion to the Avalanche people, but promises are made to be broken. So from that regards, we're getting ready to launch. So it's kind of an exciting time for us. We'll just do some quick introductions here. I spent 25 years in traditional capital markets at Credit Suisse, Bank of America, and the Royal Bank of Canada. I worked in capital markets and investment banking, and then helped run fixed income trading technology. So I'm a traditional finance guy that's crossed over to the digital space.
Hey everyone, my name is Walker. I'm the most recent hire here, so a solid fourth week in crypto. But prior to this, I worked at a private equity shop, mostly with secondaries and co-investment. And then prior to that, I was at a VC firm and an iBank. So I seem to just keep changing jobs every 3 years, but I feel like I might stay in crypto a little bit longer.
I'm the second most recent new hire. I'm Renuka Gupta, and I'm the Chief Regulatory Officer of Oasis Pro Markets. And prior to this, I was in derivatives, both on the transactional side and the regulatory side. And I'm excited to use that experience on the regulatory side to hopefully bring about good change in the regulations, both in the US and elsewhere.
Hi, everybody. I'm Evangelos Tzoulafis, SVP of ATS Services here at Oasis. So my background goes back to the late 1990s, starting with the electronification of the public markets. I worked for Bank of America and JP Morgan Chase. Also spent the last decade before joining Oasis Pro Markets at a company called Gain Capital in the FX, CFD, and derivative space. So good to meet everybody and looking forward to the conversations.
Everyone, Wes Jamieson, VP Business Development and Strategy for Oasis. Prior to joining Oasis, I was at RSM US, where I founded our blockchain practice there with 2 other individuals in 2016.
So as you can see, we've all come from traditional finance, traditional capital markets background, but we've crossed over into this new era of digital securities and kind of pioneering the way forward in digital securities transactions. Let's see if I can figure out how to make this thing work. Okay, that's one. So I spent a little bit of time talking about Oasis Pro Markets. We are viewing ourselves as the bridge from the world of traditional finance to DeFi. And we're, as I said earlier, a platform that can trade public and private multi-asset securities. What are the advantages to blockchain for security transactions? When we're transacting with a security token that's got a smart contract built into it, trading it for a stable coin, a cryptocurrency, there's a pre-validated digital ability to settle the transaction. So the transaction settles almost immediately. In the current financial world, most trades are settled on T+2, trade day +2. So Monday is the trade day. The trade will actually settle on Wednesday. We trade, if we execute a trade at 10 o'clock in the morning on a Monday, before 10:01, our trade will be settled. The smart contracts have built-in compliance. We see reduced back office costs, particularly in controllers, operations, and compliance. We see 80% productivity gains to institutions. These securities typically don't trade frequently. They trade by appointment, as we like to say. Our platform offers a state-of-the-art matching engine. So securities such as a mortgage-backed security, for example, where you need to call around to find somebody who might be interested in buying or selling that security, we've got a matching engine that will do that for us. So these security tokens reduce counterparty risk. As I said earlier, it's a pre-verified digital ability to settle a trade. If you guys remember back in the spring of last year with the Robinhood issue on short sales, especially around GameStop, there was something like 4 million trades that failed during that chaotic event. This prevents that from happening because there is this pre-verified digital ability to settle. And then security tokens allow fractionalization. So if somebody doesn't want to buy a bond that costs $1,000 because they don't have $1,000, they can buy a piece of it for $100. So, Evangelos, you want to take this slide?
Yeah, so what are the benefits of smart contracts? Here we know they're bespoke and tailored security offerings to meet an issuer's requirements, fully auditable, cost-effective global asset transfers, increased governance and cap table management. So Bob mentioned earlier the cap table management bit. We work together with transfer agents. These are third parties that actually manage everybody who sits on the cap table. So what ultimately needs to happen in digital securities, everybody that's on the cap tables needs to be accounted for. So when a transaction occurs and you're moving from one wallet to another, the TA needs to know that and accordingly update the cap table. So that's an important function, and that's an important function to the issuer. So they're efficient and transparent payment distributions. Again, that's also a really key benefit for the issuer. Currently, the inefficiencies of doing things off the blockchain with the benefits of working on the blockchain, it allows for more transparent payments, hence efficiencies, hence cost savings to the issuer. Increased liquidity, I think we touched on that a bit earlier. When you're fractionalizing, making an asset much more attainable to a larger group, the liquidity aspect comes more into play. There's going to be more transacting, and I think we're making some really good progress in valuation and performance, which will make a lot of these private market alternative type investments much more tradable. Applicable compliance and regulations built into code. Again, part of transparency, fractional ownership, which I touched on before. Smart contracts or programmable interfaces that are deployed on the blockchain, similar to what we said earlier, and they're immutable. So, from my perspective, when you think about the issuer, it's all about the efficiencies. They're going to be saving money. It's going to be much easier for them to handle payment distributions out to the underlying subscribers. From the subscriber's perspective, it's all about the liquidity. Rather than me having to hold an asset, a lot of these private assets have a hold period of 7 years or 10 years. You're offering me liquidity where I can transact with others on the cap table if there's an emergency event and I need liquidity, I can do that. And then transparency. Really, when you think about transparency, it also plays well into the regulators and what they're looking to understand about what's happening and making sure it's clean and efficient, and the cap table is exactly where it needs to be. So those are just summing up some of the benefits here.
Yeah, so I think one of the cool parts about our platform is we're bringing on a lot of traditional assets, and through tokenization and through valuation of being able to provide transparent data to help value these what was an illiquid and opaque market. We're finding that we have a lot of interest from DeFi platforms who really want to onboard a lot of assets. And actually, it's kind of surprising. You would expect if you were going to lock in real-world assets as collateral in a platform that your APY interest rate might be pretty high, but we're finding that these DeFi platforms really want these real-world assets, and so they're actually willing to offer rates that are lower than traditional markets, and really pass through the savings of blockchain back down to the issuer. And so we're working with them to really lock up those assets and help them grow their businesses.
So we talked about some of the key advantages of digital securities. For ETFs and mutual funds, we have peer-to-peer transferability, immutable traceability, and enhanced security features. Tokenized debt offers the benefits of speed of the issuance and transfer of securities. And I think, our platform and security tokens are really advantageous to a debt issuer because all the principal and interest payments are settled via the smart contract. So you don't need an asset servicer doing P&I on a debt deal, a mortgage-backed security deal, et cetera. It's all done via the smart contract. The CFO can actually affect those payments from his computer at his desk. And again, with respect to real estate, another perfect product for this type of a platform. Evangelos, do you want to talk about kind of real estate advantages?
Yeah, I mean, a lot of these asset classes historically haven't been attainable in fractional bits. When you think about proper diversification for a portfolio, if you're 100% in public market investments, that's not truly being diversified, right? If you're in only public market investments, just go back to what happened in March of 2020. You saw everything fell off a cliff. It was across the board. REITs, no matter what asset type, everything took a really big hit. Private market investments allow for true diversification. The real estate asset class has only been attainable by the very wealthy. Now offering it up to a larger audience, I think makes a big difference. And then just going back to some of what we said earlier with the benefits of smart contracts, again, what happens in real estate? You're a landlord. You have rental income coming in from your tenant. Those payments now, if I own, let's say, 0.05% of a building, those payments can be directed into my wallet. And everything's transparent through the blockchain. So it absolutely opens up the asset class for efficiencies and liquidity that we spoke about earlier.
So we talk about some of the efficiencies, and for issuers, as I mentioned, we see eliminating loan servicing costs and looking at 25 to 35 bips savings to an issuer of a debt security. Equities, you have the cap table and compliance back office savings. The cap tables are updated real time for investors. As I mentioned earlier, we're seeing 80 to 90% efficiency gains in the operations function. And with respect to risk and compliance, productivity gains of up to 40% in product control and 80% versus reporting instances. We talked about key advantages to institutional investors. We see any new asset value trading around the world 24/7, streamlined processes of trading cost, near real-time settlement, automated KYC and AML. We can touch on that in a moment, and diminished domino effect of large trades on an issue. One thing I think I didn't mention earlier with respect to counterparty risk. If you remember in 2008, the financial crisis, most of the repo agreements and credit default swap agreements were actually written on paper between banks and insurance companies and filed away in some metal file cabinet. Nobody ever thought they would have to look them up to figure out where their exposure was. And there was a mad scramble across Wall Street to figure this out. And it took 2 weeks before anybody realized that AIG had insured the lease of the Lehman Brothers building in Canary Wharf in London. So there was a real knockdown effect, lack of information. Smart contracts provide real-time information, perfect information, accurate information with respect to counterparty risk. And some of that comes back on this slide here. We talk about compliance. Renuka, do you want to talk a little bit about compliance in smart contracts and the benefits?
So I think we're at a stage regarding compliance and regulation where we're trying to convince the regulators of the benefits, like Bob has gone through here and my other colleagues. I mean, there's real benefits in a crisis for the regulators to have immediate, immutable information, access to information, if they just weren't so scared of the new technology. And that's, something we certainly offer. Oh, sure, of course. And so, for instance, through the blockchain and through having subscribers to our two platforms, the primary and the secondary, we will automatically do AML and KYC and have that recorded in the systems that we offer, as well as it offers a way to if there are issuances that are limited to certain types of sophisticated investors, we can manage that as well. And if the U.S. regulator, because we're authorized in the U.S. only at this point, were to come in, it would be very easy for us to pull those records and show them how we've complied with the various rules. And so we're certainly working with the regulators to get them there and to have them understand that this is safer than having just one centralized entity have all this information. And hopefully we'll get there in the future. But till then, we're going to continue down the path of complying with the applicable laws in the U.S. or wherever else we do business.
I think we've touched on all these points throughout the course of the presentation here. We can look at private securities and the size of the markets with respect to where they are versus public securities. You can see private security markets, clearly are much bigger than what we've seen in the public space. So we see real benefits to private securities here. Our platform is not only going to be built to trade a Tesla or an Apple on our platform. If they wanted to issue a new class of security, they could do it on our platform, but we're not going to be able to offer nationally market securities on our platform. It's really built, in my mind, generally for private securities. You can look here again, this does show you how private markets, are much bigger in terms of volumes and size versus the public markets. And, how does this all kind of come together and what are the real benefits, and can we look at kind of a use case? There was an initiative, a pilot of an asset-backed security trade that was done in cooperation between Vanguard, State Street, and a blockchain protocol that will remain unnamed. So they completed the first phase of this issuance in about 40 minutes. These things typically settle in 2 or 3 weeks. The margin calculation process for a live trade using a blockchain protocol was more frequent, and the automatic valuations were facilitated. And all of this is going to be rolled out by Vanguard throughout 2022. So that's kind of an overview of the advantages of digital securities, a little overview of Oasis Pro Markets, and now we can open up for Q&A.
Please, let's use the mic.
No, yeah.
Oh, there's another one coming. Okay.
Hi. I have a question regarding the markets that you cover. You cover only U.S. Or?
No, we don't need to cover only U.S. So an issuer would come to us. The issuer doesn't necessarily need to come to us with an offering that is exclusively U.S. At the moment, we'll be onboarding subscribers that are U.S. However, we're gonna expand that. But as far as the offering goes, it doesn't need to be onshore in the U.S. It could be.
Can I have a hypothetical?
Yeah.
So I would be an issuer of a real estate token. Let's say we are acquiring a clinic in Bosnia, and I want to issue it to raise capital, to collateralize it, and raise capital for the next clinic.
Yeah, absolutely. It's something that we can offer. You would look at the type of offering. So let's say it's a Reg D offering or a Reg A plus offering, or maybe a Reg S type offering. We would do our due diligence at Oasis Pro Markets and make sure that we're comfortable with you offering being on our marketplace.
Okay.
And we would, at the moment, onboard subscribers from the U.S. to invest in this particular deal.
Okay.
Yeah.
And sorry if I'm. Do you take third-party due diligence as a valid, let's say KPMG?
That would be very helpful to have that. I would I would tell you that our
Okay.
GC and compliance would also want to conduct their own due diligence as well.
Okay, cool.
Yeah.
Cool.
But that's going to be very helpful.
Okay.
That KPMG sort of validation is going to be very helpful.
We are doing it like that. Okay.
That's great.
Thank you.
Yeah. Yes.
So do you have any kind of competitors? Like one project I can think of is, for example, Alliance Block, which I think could be doing something similar to what you're doing. And if you are aware of any competitors, how do you compare to them?
Yeah. What was the particular use case that you mentioned? Who was that competitor? Alliance Block. Okay. Well, we're a FINRA-regulated broker-dealer, so I'm not sure about Alliance Block if they're regulated and under which particular jurisdictions, but we are FINRA-regulated. To acquire our licenses was quite a process. Renuka mentioned before the regulation and educating regulators like FINRA and the SEC about what we're doing. I think Oasis Pro Markets has a key differentiator in what we do because we're able to settle digital securities for digital cash. So you would be able to use USDC or DAI to settle the transaction. That would happen away from the ATS. It would happen at the custodian. That's where your wallet can be held at a custodian through this process. It's called a three-step process in the US. But I think that's a key differentiator, being able to settle with digital cash versus just USD or any other fiat currency.
Hi. If an issuer comes to you, to do a Reg D offering or something like that, is the universe of investors your clients, your broker-dealer clients, and then in the secondary market, is the secondary market just limited to your clients, or do you branch out?
Yeah, no, that's a great question. It's actually, we've recognized that a lot of issuers that come to us already have subscribers on their cap table. They have investors that want to invest in those particular deals. So they would onboard with Oasis Pro Markets. But we also have institutional clients, accredited investors, and retail through the channels that would transact in deals as long as they're yield generating that makes sense for their particular risk profile. So it really depends on the deal. Issuers can bring subscribers and they would onboard through us, or we would already have the subscribers on our platform who would invest in those deals.
Just again. If my understanding is right, you are doing, you are bridging world of atoms to world of bits, and that's it.
Yeah, so we're taking private market type investments. Commercial real estate, private equity, venture capital, syndicated loans, MBS type securities, fixed income. We're taking those and incorporating the benefits and efficiencies and liquidity of the blockchain. So a lot of what we do is very similar to what's done, away from the chain. But now we're leveraging all the benefits of the blockchain to make it more liquid, more efficient, and more transparent.
Okay, thank you.
Yeah. I think again we're based in the U.S. for now.
Yeah.
Sorry. We're based in the U.S. for now. But I think recently it's become clear that at least the U.S. securities regulator views a lot of the yield products in the DeFi space as securities. So since we are registered to take on securities as in the primary and the secondary markets, we certainly offer a compliant, regulatory compliant way for those types of products to be offered in the U.S. to the extent they continue to be characterized as securities.
Okay, basically, I would have a simple question. How much in commissions are you taking from listing a property, let's say, on your platform? Basically, just imagine I would have like a commercial property which I will be looking for investors, and I would decide to work with you. How much in commissions I would need to pay you, let's say, if it finalizes, and if you manage to find investors for me?
It's about the pricing specific to the primary raise, I guess, and for secondary trading. I don't know, Wes, do you want to take that more on the pricing side?
Yeah, so our pricing, since we're in ATS, it can be pretty dynamic. So it's on an issuer by issuer basis. On a primary market side, that varies based on the number of issuances or the frequency of issuances a potential issuer can do. But it's, I think certainly far less than you would find in a traditional marketplace. We're happy to chat more on that afterward.
I'm curious about the reactions of your former colleagues about what you're doing now, because when I speak to traditional actors, of course they say, yeah, but you were born with the blockchain and stuff, that this thing, you don't know what you're talking about. But since you were working previously in that field, how do they react to you working now in the blockchain area?
Well, that's kind of interesting. As I crossed over into this digital crypto blockchain space, I don't want to say I was one of the first, but I was certainly in the early part of the migration of people who have worked at large banks, investment banks, et cetera, who are moving into the digital asset space. Many of them are opening up crypto funds, et cetera. But in our space, we're seeing a lot of interest with respect to joining a platform like ours. Overall, we have been on a number of Zoom calls with potential issuers who have remarked that it's always nice to see a guy with gray hair in the room, because the crypto world, as you know, is usually 20 or 30 something. So we have deep experience in traditional financial services. I think the large banks are definitely looking into this. Having worked at Bank of America, which is a huge behemoth of a bank, they are so burdened by inflexible legacy infrastructure that for them to move quickly into the blockchain space, they'd spend $1 billion over 5 years and not even be halfway done. So I think what we've built, this sleek, streamlined, forward-thinking platform is tremendous.
My understanding, you already convinced the issuers, the traditional issuers and the bankers, everything. Just wondering, you did your best not to answer the time frame for the regulators part. How is the educating the regulators is going? What do you have in your mind? In a year, 2, we get convinced the regulators?
I think we're, keep forgetting. I think we're several years off from having a harmonized regime. I think certainly the US is on a path and Europe is on a slightly different path, and then there are, places like Singapore where they're very forward-looking. I think that Oasis Pro Markets is set up for the now of how things are regulated. It could change in the future. So the direction that we're heading until the US has different kinds of rules in place for digital blockchain securities, for cryptocurrency, which there aren't really, US-wide rules. There are some state rules. I think that, in the interim, we have to do our best to comply with the obscure regimes that we have. And I think it's somewhat difficult, and I think that we as an industry, kind of everyone who's on the blockchain or, in DeFi will have to adapt and be agile as things change, which, I'm new to the industry, but from what I've seen, everyone that I've met is very good at. So I don't think we'll have a complete picture for several years that's harmonized in a way, but I think we'll just have to react and continue. It's really a slog of explaining how these things work and benefit the regulators over and over again. Here in Europe, in the U.S., in Asia, all saying the same story as many people as possible about the benefits to the regulators.
So thank you for this. It was very helpful. Maybe following up the secondary market part, is it possible to list any of the tokens outside of what you provide as a market, or should they all be incorporated within the U.S. licensed security providers, as you have mentioned before? So should they always be in your platform, or can we take the securities to any other platform and have relationships there?
Yeah, so as far as trading goes, they would need to be within our platform. And the reason is because everybody who's on that cap table would transact with one another. And the transfer agent, I mentioned the transfer agent's role before, sort of managing the cap table, they would need to know and be able to report back the movement. Now, we follow what's called the SEC three-step process, but there is a four-step process, and the possibility of being able to leverage those tokens, those security tokens, and have them in your wallet and then move them elsewhere to transact. So we think through regulatory sort of process, things will get there, and you'll be able to do that. Hopefully, we've had several discussions with the regulators on this front. But that was a good question. Thank you.
Thank you all for coming. Thank you for Avalanche for setting this up. We'll be out in the tent here having a beverage if anybody has any questions or wants to chat informally. Thank you very much.